Hey guys, this is Ankush here and I welcome you to the sixth episode of Trading with Candlesticks. Today we will be discussing a very interesting subject called Fibonacci. Now those of you who know about Fibonacci series might be wondering what Fibonacci series has to do with share market and stock trading. So to know more about it, stay tuned till the end of the video. So let us begin by understanding what is Fibonacci series and a brief history of Fibonacci series. The series was first invented by an Italian mathematician named as Leonardo Fibonacci, and that's exactly where it derives its name from, the Fibonacci series. Now the Fibonacci series begins with the basic numbers 0 and 1, and to derive its next number it simply adds these two numbers, which means 0 plus 1 equal to 1. That becomes the third number of the Fibonacci series. Now to derive the fourth number, you add 1 plus 1, that is 2. The next one will be 2 plus 1, that is 3. And the next will be 3 plus 2 equal to 5, and so on and so forth. As you keep on adding the last two digits of the series, you will get the series as 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, and so on and so forth. Now let us look at the next important aspect of the series, which is known as the golden ratios. Now what are golden ratios? To derive these ratios, let's take any one random number out of the series, say 55. Now what we do is we divide the previous number of the series, that's 34, by 55. And you get a ratio of 0.618. Let's repeat the exercise by skipping one number. That is, this time we take the number 21, skip 34 and divide it by 55. So 21 by 55 will give me the next ratio, which is 0.382. Let's repeat the exercise again by skipping two numbers. That's, this time I'll take 13 and divide it by 55 once again. And this time I get a ratio of 0.236. It will be very interesting to note that we will get the exact same figures if we repeat the exercise with any other number. Let's once repeat it with 89. So if you divide 55 by 89, you get 0.618. You divide 34 by 89, you get 0.382, and when you divide 21 by 89, you get the ratio of 0.236. And this is the reason why these ratios are known as golden ratios. The important factor is, in the stock market, we use these ratios to determine the amount of pullback and where to buy during the trend. So if you remember my previous videos, or if you have seen my previous videos, I have always said buy towards the trend and always look to buy after the pullback has been done. And we will see in some time in future that in this video that all these pullbacks typically happen at these Fibonacci golden ratios. But before we jump in, one last interesting fact which I want to tell you about Fibonacci. That did you know Fibonacci is also present all around us in the nature? For example, if you take the flower petals are always a number of the Fibonacci series. The way the tree branches out, different branches are formed. It's again in the form of a Fibonacci series. Our face, it's divided in the ratio of Fibonacci series. The animal body, that's in this ratio. The shell, the tornado, the inner part of the ear. So it's not only a theory, but it's present all around in nature, and that's where we can also relate it and use it along with the stock market to place our trades. It's time we now look at a strategy which is defined based on the Fibonacci golden ratios. So let's see how it goes. Step 1, as I have always said in all my videos, is to identify the trend. And how do we identify a trend? Is with higher high and higher lows. In case you have any doubts about how to identify the trend, please look at my couple of my videos, which is episode 4 and 5, and you would come to know how to identify a trend. So the first topic here is to identify the trend. If we have higher high, higher lows, it's an uptrend. If it's lower high, lower lows, it's a downtrend. In today's video, we take an example of an uptrend. Step 2 is again from one of my previous videos. We never buy at a swing high. We always wait for a pullback to happen, and once the pullback has happened, we wait for a bullish candlestick formation at the support, and that is when we confirm that a pullback has happened, and that's when we enter the stock. But what happens to a stock which is at an all-time high? How do I determine which is the support level? Because there is no history of any support or resistance. And that's exactly when Fib retracements or Fibonacci retracement comes into picture. Let's see how. Now, in a Fibonacci retracement, what we do is we draw the Fibonacci retracement, which we will see in some time how to draw it, from this previous swing low to the previous or the latest swing high. If you see here, we have the Fibonacci ratios 0.382, 0.618. Now 0.5 is not a Fibonacci ratio, but because of the significance of the value and the emotions which people connect to a 50% pullback after the bullish run, that's why 0.5 has been included for stock markets as a Fibonacci support level. Now, typically what you do is after the pullback has happened, at one of these Fibonacci levels, you will have a bullish candlestick formation. Now, if we see this particular chart, at 0.382, we don't have any indication that there is a reversal. But if we come further down at 0.618, we have a bullish engulfing. And this is where one should buy the stock. And once bought, the target to take profit should be at the previous swing high. Okay, so let's go through once again. Step 1, identify the trend. Step 2, wait for a pullback. Step 3, after the pullback, wait for a candlestick formation at one of the Fibonacci retracement levels. Now let's go and have a look at one of the stocks where I had used a Fibonacci retracement technique to buy and sell the stock. Let's take a look at one of the premium companies, that is Reliance Industries. Now we know that Reliance Industries has been in an uptrend for quite some time in spite of COVID. And it is one of the few companies or stocks which is running at an all-time high outside the pharma sector or outside even the IT sector. Yeah. Now, if I have to trade in Reliance, how do I trade? Let's have a look at it. Now, this is a graph which runs from mid of July till date. And if we see from mid of July till about end of July, it had a pretty strong bullish run. Now, let's go by the roots. So the first thing, we know that it's in an uptrend. The second thing, we do not buy at swing highs. We have to buy at swing lows. But for Reliance, how do we know which is the swing low? Because there is no history of any support or resistance from its past, because earlier 1600 was its all-time high. And this is exactly where Fib retracements come into picture. Fine. So step 1, we have known the trend, which is bullish. Step 2, we have to wait for a pullback. Step 3, we have to draw the Fib retracements level. How do we draw the Fib retracement? In the in-trading view, go to the panel, to the third one. If you click, you basically get the menu with pitchfork, and there is an option of Fib retracement down here. Just choose this, click on the previous swing low and draw a Fib retracement up to the latest swing high. Now here, if we take a closer look, post the bull run, you will be able to see a bearish engulfing candle form right here. Now, what does a bearish engulfing indicate us? As explained in episode 2, a bearish engulfing indicates a downward movement. But since the trend is upwards, this will merely indicate that a pullback in the stock has started. So that is where you start waiting for the stock to hit one of the fib retracement levels. Now, as I had mentioned, 0.5 is included merely due to its emotional significance and the history and past experience in the stock market. So now if we look at the Reliance stock once again, this is somewhere around 4th of August. You will see at 0.5 fib level, you can see one spinning top, second spinning top, and then a bullish engulfing. Now, if you remember my second episode once again, whenever we have a spinning top, we have to wait for a bullish signal to form before we can enter the stock. Now, this is a 15-minute chart. So at 9:15, we had a spinning top, 9:30, we had a bullish signal with higher high, higher close, which means it is a clear indication we can enter the stock. And that's exactly what I did. I made an entry here with a target profit of 2199, which it barely skipped most likely. And again, you can see a bearish piercing at this level, which means it indicates a downward movement. So a simple knowledge of Fibonacci retracement could help me to make my profits and cover this part of the stock movement. Let me show you the contract note for that. So if we see, the order was placed at 9:52 on 4th of August for Reliance Industries, and the target was to buy. And if we see, the price formation over here is 2045. That's exactly after the signal of bullish engulfing. So that was it from my side for the Fibonacci series and how can we use the concept of Fibonacci golden ratios in our day-to-day trading. In case you like the video, I would request you to subscribe to my channel and do not forget to press the bell icon so that you can get regular updates. Till next time, stay safe, stay happy, and enjoy your trading. Thank you.